the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the major developments in the banking sector. It is June 22nd, 2023. I am Ruchika Chitravanshi. Today's cover story is about our RBI Governor Shaktikanta Das receiving the Governor of the Year award. CSB Bank's MD Pranay Mondal is our guest today for the Banker's View segment. We will cut the jargon and explain what an accommodative stance is in our Banking for You segment. After which, our consulting editor Tamal Bandyopadhyay joins us to discuss the happenings in the banking corridors. At the end of the show, we will tell you the results of the last week's poll and the question for this week. RBI Governor Shaktikanta Das was recently named the Governor of the Year at London's Central Banking Awards 2023. He is the second RBI Governor after Raghuram Rajan to have bagged this award. What is it that Das has done right, and what makes him stand out? Here's a report by Manojit Saha.
Shaktikanta Das, the 25th Governor of the Reserve Bank of India, was awarded the prestigious Governor of the Year award by Central Banking, a portal that tracks and analyzes global central banks and financial regulators. In its announcement, Central Banking said the Governor has had to navigate turbulent waters, from the shock of COVID-19 to the effects of the Russian invasion of Ukraine, against a tense political backdrop. Das demonstrated remarkable communication skills in balancing crisis support measures against the need for financial discipline, as RBI continues to clean up long-standing weaknesses in public sector banks. Das, a former bureaucrat, took charge in December 2018 amid a reported tussle with the government over the distribution of RBI surplus. At the same time, the Indian economy was facing the twin balance sheet crisis. Das demonstrated adroit administrative skills and deft communication to navigate India's complex bureaucracy, defend the central bank's role, and push through important reforms. In Das's words, the Indian banking system is resilient, but there is no room for complacency.
This is a very well-deserved award for Governor Das and his team. Governor Das led his team with a very adept and agile response. Remember, this is a first public health crisis. I mean, unlike the other financial crises that have been heard before, so this is completely uncharted territory. They used a combination of policies of monetary policy, regulatory policy, prudential policies, etc. So that was a very, very coordinated, adept policy. Secondly, despite the strength of the response, they still did a very calibrated response to the policy. I mean, unlike their counterparts, the other G10 central banks, this resulted this did not result in a massive buildup of a stimulus, which would have created many more problems for inflation, persistence of inflation, etc. They also coordinated with the union government on many of the stimulus measures, example, the ECLGS program for MSMEs. Fourth, they also anticipated the risk of inflation getting persistent, and much before the other G10 central banks, they actually started exiting the very ease of the accommodative policies, and right from 2021, if you remember, they stopped the GSAP, then started extracting liquidity from the system. So it was much before the other central banks.
The last RBI governor who received this prestigious award was Raghuram Rajan in 2015. In 2021, Das's term was extended by another 3 years. Once he completes his full term, Das will be the first governor after Sir Benegal Rama Rao, who was in office for 7 years and 197 days between July 1, 1949 and January 14, 1957. Another highlight from Das's tenure as RBI governor is his communication policy.
The communication throughout, remember, this was a period of extreme uncertainty and volatility. So their communication was very, very comprehensive, very timely, frequent, simple, and clear. And that helped keep markets not going as volatile as we saw in many other countries in the world.
The RBI's Monetary Policy Committee, or the MPC, chaired by Das, started to raise the policy rates in May 2022. This was to tackle inflation mainly caused by supply-side constraints, thanks to the Ukraine war. Even if RBI missed its mandate to keep average inflation within a band of 2 to 6% for 3 consecutive quarters, the calibrated approach to increase rates helped India remain among the fastest growing economies in the world. In the last 2 policy meetings, the RBI MPC paused rate hikes. It wanted to assess the impact of the 250 BPS rate hike between May 2022 and February 2023. In his policy announcement, Das indicated that the central guard is in no mood to drop the guard on inflation. Apart from an unwavering commitment to maintaining price stability post the Ukraine war, digital innovations by the RBI moved to new frontiers and acquired new dimensions and scale, with Das helming as the prime mover of change. These include making payment systems available on a 24/7 by 365 basis, interoperable QR code-based payments, pilot launch of the central bank digital currency, to name a few, which culminated in Das being chosen for the Governor of the Year award.
COVID-19, the Russia-Ukraine war, and the subsequent fight against inflation. It has been a challenging ride that Das has steered through quite successfully. In our next segment, Manojit Saha speaks to Pranay Mondal, Managing Director of CSB Bank, about a range of issues, such as their strategy towards becoming a mid-sized bank in the next 7 years and their aim to grow at a rate higher than the market to achieve this goal. Here's the chat.
Welcome to the Business Standard Banking Show. CSB Bank, earlier known as Catholic Syrian Bank, is on a steady growth path, which reported rupees 547 crore net profit in FY23, up 19% over the previous year. Praloy Mondal, MD and CEO of Catholic CSB Bank, who took charge last year, is here with us today to share his plans. Mr. Mondal, welcome to the show.
Thank you, Manjit. Thank you for having me on your show. Thank you very much.
So you will be completing the first year of your 3-year term in September this year. What are the milestones that you want to achieve in your first term?
See, Manojit, I think 3 years is a small period compared to what we want to achieve in the long run for the bank. But yes, we are having milestones. One is for the next 3 years, and then more importantly for SBS 2030, which will end in 2030, by which we want to be in the mid-sector category, in the mid of the mid-sector category. And then from there, we will take a further growth plan from there. So what we have done is we have divided these 7 years phase into 3 parts, and we call it SBS 2030, sustain, which is sustaining what you have done well so far, then in parallelly build for the future, and then scale it out from there, from FY26 onwards. As you know that as a bank, while we are a 100-year-old bank, more than 100-year-old bank, but we have started a very different aspirational journey of growing the bank, and we will grow faster than the system by at least 30 to 50 years over this next 7 years till SBS 2030. And in these 3 years also, we'll grow faster than the system, at least by 30 to 50% on our balance sheet. If you look at the last year, which I completed, though I took over formally as a managing director last year in September, but as an interim, I was also looking after as a managing director from April, and hence I was accountable for delivering the whole of last year's business. So we grew by almost 30% in assets growth, and we grew by 20% in liability growth, which was on liability, it was 2 times faster than the system, and on assets it was 80% faster than the system. But percentage doesn't mean anything for such a small balance sheet size at this stage. It's relatively easier. But as we go into next year and next year, the primary objective is just not growth. Primary objective is to build the building blocks of the bank. And the building blocks includes technology to start with, the right leadership team, the right geographies, and the distribution, and the digital framework and process straight-through processes and service framework. So these are the places where we are investing in a very, very big way. We are revamping our entire technology platform. Almost there will be nothing in the bank which was there 2 years back. Okay, whether it is a core system, surround system, LOS, LMS, the APS, whatever you call it, we are putting everything new, and we are heavy lifting the investment in the next 2 years on technology. On the leadership, we are almost done. 70-80% of the leadership team has already joined. 20% more to go, and all of that will be over by end of this calendar year, not even financial year. By end of this calendar year, our entire new leadership team, including some of our old great leaders, will be a part of this journey. We will continue till SBS 2030 and beyond.
Right.
On the service framework and distribution, we are adding 100 branches every year. This year also we'll add 100 branches. 60% of those branches will come in North and West, because we are now becoming a pan-India geography-focused kind of a bank. And we are going to launch all products and services, be it on retail, be it on SME, or be it on wholesale. The planned business mix is already we are strong in gold loan. The planned business mix SBS 2030, that is my 2030. The plan is to have 20% gold, 30% retail, 20% wholesale, and 20% SME, and 30% wholesale. And in the near future, the real heavy lifting on the retail will happen FY 26-27 onwards, because we'll launch those products, test those products, etc., and season them. And in the short term, the gold loan will continue to be our heavy lifting in terms of revenue, so that we can invest into the bank. So that's broadly in a nutshell.
But coming to the current financial year, what kind of loan growth do you expect in the current financial year?
Difficult to giving forward looking, but if I can just break it up, nominal GDP, let's say it's around somewhere between 10 to 12. So hence credit growth expected to be similar to what last year was, maybe around 14% or so. So take a 50% faster than that growth. So given all of this, I think anything upwards of 20% is given. We'll try to do better than that.
The other issue is the capital adequacy ratio. You are sitting on 27% capital adequacy ratio with 26% Tier 1 capital. What is the reason to have so much capital? Because capital, after all, has a cost.
Very good question again, Manojit. But let me tell you that gold loan is, the risk-weighted assets are so low. I mean, it's zero effectively. And our portfolio quality has continuously improved across all our businesses. And hence, you can understand that last year when we grew our asset book by 30%, our capital adequacy actually went up. So it is not coming at the cost of growth. It is coming in spite of growth. What it means is that we are doing the businesses which one side is our quality of the portfolio is getting better, and hence our risk weights are coming down. And B is gold being 47% of our portfolio, where effectively risk weights are zero. But this is too good to be true for long run. And as you see that as the trajectory of SME and retail starts going up, where risk weights are much higher, automatically this will come down. But that does not mean that's a bad business to do, because with those, ROA becomes better, because you have the ability to cross-sell multiple products. In a gold loan business, it's very difficult to cross-sell multiple products. So risk weights will be higher, but your ability to garner multiple revenues across cross-sell, including liability, will be higher. So it's a pure play banking business, which we'll get into gradually. So this will come down over a period of time.
But overall, you have a sense that the bank is adequately capitalized and portfolio will not have a problem adopting the ACL framework.
Absolutely. Not only capitalized, I think in terms of P&L, the impact will be reasonably limited, because we are sitting on excess provisions at this point of time. Our PCR today is upward of 90%. So to that extent, I think we have reasonable coverage there.
Right, right. On that note, thank you, Mr. Mondal, for speaking to Business Standard. It was a pleasure talking to you.
Thank you, Manojit, and thank you for having me again. Thank you.
So with big goals ahead, CSB Bank would be focusing on its building blocks for the next few years. In our next segment, we are talking about a term that is often used when we are discussing the monetary policy of the Reserve Bank of India: accommodative stance. In Banking for You today, we understand what the term means and what withdrawal of accommodation entails.
In the monetary policy announcement on April 8, Reserve Bank of India Governor Shaktikanta Das said that the committee has decided to continue with its stance of withdrawal of accommodation. The 6-member rate-setting committee had changed its official stance from accommodative to withdrawal of accommodation in June 2022. But what does the accommodative stance in a monetary policy mean? If a central bank decides to keep the stance as accommodative, it is prepared to increase the money supply to boost growth and reduce unemployment in the economy. To increase the money supply, the central bank usually cuts the key interest rates. If it does not go for a hike, a rate cut is ruled out completely. This stance is usually taken during and after a crisis to provide support to the economy. In the 2 years of the COVID-19 pandemic, between 2020 and 2022, the RBI kept an accommodative stance. Moreover, an accommodative stance is taken when inflation is not the immediate concern in the economy. With low interest rates, businesses and investors are encouraged to take risks and invest more. This policy is withdrawn when inflation comes into focus and starts hurting the consumption in the economy. Last year, the RBI started hiking the repo rate in May after inflation soared past its upper tolerance limit of 6% in March. In April 2022, retail inflation touched a multi-year high of 7.79% on the back of supply-side bottlenecks due to the COVID-19 pandemic and the war in Ukraine. This prompted the central bank to withdraw its accommodative stance in the June MPC announcement. Since then, it has maintained its stance. Apart from accommodative, there are 3 other stances a central bank can adopt. Let's discuss them one by one. With a neutral stance, the central bank signals that it places an equal priority on inflation as well as growth. The MPC can use either rate hikes or rate cuts to suit their needs. The decision is dependent upon the incoming macroeconomic data. The inflation in India has continued to cool down since March this year. In March, it fell below the upper limit of 6%. In April, it cooled down below 5%. Several experts have said that the RBI must change its stance to neutral, but the MPC has decided to go for the withdrawal of accommodation. Another type of stance is when the MPC decides to be hawkish. Under this, the main aim of central bank is to control inflation. If the rate-setting committee goes for this stance, it means they are willing to hike interest rates to curb the high prices, even if it hurts the growth rates. Under the hawkish stance, the central bank tightens the monetary policy. As a consequence, banks increase the interest rates on loans as well as on deposits. This does not allow the customers to take more loans and simultaneously encourages them to deposit more money in their bank accounts, thus sucking the liquidity out of the economy. Generally, this is done when inflation is too high and needs to be brought down quickly. The central banks have been widely using the term calibrated tightening in their monetary policy announcements, especially since the start of 2022. Under this stance, a rate cut is off the table and the rate hikes take place in a calculated manner. The central bank may not go for a rate hike in every policy announcement, but its stance remains tilted towards a rate hike. In this case, rate hikes can occur even outside the usual policy meetings if the situation warrants. Generally, this stance is taken when inflation is high but not too high, and the central bank does not want to hurt the economy's growth rate.
I am the blue of the limitless sky. I am the inspiration that led success so high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
So that's Raghav's report explaining the various stances the monetary policy could take. Now that we are all caught up, let us move on to our Expert Take segment with our consulting editor, Tamal Bandhopadhyay. I spoke to him about IDBI challenges, RBI's circular about compromise settlement for willful defaulters, and also the SBI chairman's salary saga. Hi Kamal, good to see you again. Welcome back to the Business Standard Banking Show. So let's start with what you've talked about in your column this week on IDBI Bank. And you've said that there are challenges ahead of IDBI Bank and how it has gotten its act together, and you see some serious suitors for it in the coming days. Can you take us through what does the road ahead look like for IDBI Bank?
Well, structurally, the road ahead is this: it is going to be privatized. I mean, in a genuine sense of the term, because LIC taking over the majority stake is not privatization. So, as we speak, the technical bids are being examined, and at the next stage, we will see the financial bidders coming. All depends on Reserve Bank of India's approach. Who is the fit and proper? So there are names in the media. I'm not getting into that. I would like to believe the entire process should be over by December, the end of this year, and the government will continue to hold 15% stake after the dilution. But that 15% stake will be interpreted as a public stake. As far as health of the bank is concerned, I think it's coming up pretty well. On all parameters, you see it's well capitalized. Already, its non-performing assets have come down dramatically. Indeed, gross non-performing assets is 6% plus, but net non-performing assets is less than 1%. Its PCR, provision coverage ratio, is in late 90s. Its CASA has improved dramatically. Its cost of funds have gone down. The asset mix that's between retail and corporate, which was the culprit for the bad loans, have been taken care of. Now it's more retail. Actually, it's a little more than it should have been. So I think bank is trying to bring down the retail a bit now to have a happy combination. Return on assets, if you look at IDBI, it's pretty good. I mean, better than many of its peers. So on all accounts, apart from the fact that it has gone good talent picked up from the market, its credit appraisal system has got better, underwriting system has got better. All these things, I think it augurs well for the bank, and I'm pretty confident that it would get some serious suitors. And by December, the entire process should get over. It's important in the sense, once the IDBI real privatization happens, then I would like to believe the government will be encouraged to bite the bullet for the privatization of two public sector banks, which it had committed in 2021. The budget document spoke about it, but nothing has happened as yet. So I think next year we'll see that.
It augurs well for the bank, but let's talk about SBI Bank. Now, I did see your tweet, and we saw so many stories being talked about SBI chairman's annual pay package. What did you think of it? It is too low compared to private, and that stark difference has caught a lot of attention.
You know, there are two ways of looking at it. One way of looking at it, it's pretty low. And why should it be? A bank chairman's salary, public sector bank chairman's salary, should be linked with a bureaucrat salary, because that's what has happened. You know, in the IAS salary and the public sector bank salary are interlinked. Now, there is two different kind of jobs. Bureaucrat jobs are very different from the banker's job. And here is a banker who was handling 55 trillion plus assets. I mean, how could you give him such peanuts for that? Bankers are dealing with money, and that's not the case with SBI alone. I mean, it becomes very glaring because its asset size is too big. It's roughly little more than 1/5 of the Indian banking system, one of the top 50 banks globally. So it becomes more glaring, but this is true about all public sector banks, and much smaller private bank CEOs earn much higher. That's one side of the story. But if you look at the other side, if you see through a different prism, you will find that there are a lot of other facilities which typically a public sector bank chairman gets, which private sector bank CEOs don't get. I'm not talking about only house and car, etc. There are many more benefits. I mean, if you include all those benefits, if you allow them, and if you put up a structure monetizing all, probably it will be comparable. Even in some cases, public sector banks probably may end up getting more than counterpart in the private sector. So I think it needs to we need to have a more transparent way of deciding on the structuring the pays and parks, salary and parks of the public sector bank.
So, as we are coming to the end of our chat, there is one important issue to talk to you about, and that is the RBI circular on the compromise settlements with willful defaulters. There's a lot of flack that this notification is getting. Can you take us through what has happened and what is your view of this?
Ruchika, I'm glad that you have asked the question. I think there's a lot of misconception about the interpretation of the RBI. Before that, what's the world of willful defaulters? As we speak, I think there are 15,778 willful defaulters as of December 2022, and the total money involved is 3.45 trillion. I repeat, 3.45 trillion. That's the TransUnion CIBIL data. For instance, State Bank of India has the highest number of willful defaulters, and also the quantum. It's 1,883 willful defaulters, and the money involved is 79,000 crore plus. Next come PNB, which is roughly half of State Bank of India. So that's the willful defaulter story. Now, has RBI given a blank check to the banks to go and do a compromise settlement and give fresh money to willful defaulters? Absolutely not. I mean, first of all, this is an old circular. RBI has just aggregated all the circulars and they put together and come out in a new packaging form. So there is nothing new, and with responsibility I'm telling, there's nothing new about it. Apart from the fact that not only the banks, all the regulated entities, which means the cooperative banks as well as the NBFCs now have come on this. Second is this. First of all, it's nothing new. Second is this. It is talking about, it's not a blanket, okay, that you go and give money to every willful defaulter, even if it's after 5 years. It is left to the boards. The board will decide who to give and not to give. And wherever there are criminal cases, etc., I said you have to take cognition of that.
So thank you, Tamal, for clearing so many misconceptions, and rightly said, RBI circular is not a blanket okay. It is left to the boards. And just like you talked about the SBI chairperson's salary also, it cannot just be looked as a pay package. There is much, much more to it. And of course, as you talked about IDBI Bank, and we have read your column as well, that it is looking good for IDBI, despite some challenges that remain. Thank you once again, Tamal, for joining us, and see you next week. That was Tamal clearing the cobwebs and bringing us the full picture on some of the big issues in the banking world that have made news recently. And now to our last section, the Business Standard poll. Here's what we asked you last week. Will the RBI cut rate in August? 47% of our respondents said yes, and 53% said no. Compromise settlement is a negotiation where a borrower offers to pay and the bank agrees to accept in full and final settlement an amount less than the total amount due to them. This means there is a certain sacrifice by way of a write-off or waiver of a portion of lender's dues on a one-time basis. Now, the RBI circular on June 8th has allowed the banks to go for such settlements with willful defaulters. And so, here's the question for this week. Should compromise settlement be allowed for willful defaulters? Our polls are open today, which is Thursday, and you can respond on LinkedIn, Twitter, Instagram, and our website business-standard.com. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.